Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
All right, welcome back to the Gentle Art of Crushing It podcast. My name's Randy Smith, and I am going to be your host today. And I'm really excited to have Sanjoy Dey with us today. Sanjoy is a retired engineer. He is a passive investor. He's an LP in 13 different positions with 6 different operators. He's also the founder of Corfu Capital, which helps busy professionals build passive income and generational wealth through multifamily investing. And he's a pretty avid traveler as well, being to 57 countries, I believe, already. So, Sanjoy, welcome to the show. Super excited to have you here.
Thank you, Randy. I actually listened to so many episodes of your podcast program, and like we've been talking for many years, and I'm pretty excited also to be on your show and talk about all this multi.
Yeah, very good. I'm glad to have you here too. So, well, let's jump in. Tell the audience, if you can, a little bit about yourself and
Sure.
Part of your journey to today.
Yeah, sure. So, little bit about myself. I'm based out of San Diego, California. I've been living here for the last 16 plus years, and I was in corporate America for almost the same amount of time, like around 16 years. And I started my real estate journey almost like 10 years back with single family portfolio. Out of state though, I don't invest in California. So at some point I got introduced to this multifamily domain. A friend of mine actually introduced me, and then it gave me an opportunity to kind of compare, okay, what would be the additive advantage of this multifamily domain in compared to the single family domain. And then I found that this is nice and an exciting path to actually scale up. Where you can play different roles here. Like you can be a general partner, you can be a limited partner, you can invest passively, you can also have some active income as well through your active role. So then I embarked on this journey, and I started investing passively in 2021. And 2022, I formed this company and started like involving myself into different deals as a general partner. So my first deal was in San Antonio, Texas, and since then I got into 5 different projects as a general partner, and these are spread all across the state of Texas and Arizona. And right now I'm actually looking into expanding my footprint into the state of North Carolina as well. So yeah, that's pretty much about my journey. And I'm looking forward, to increase my investor base and to help more people actually to build their generational wealth.
Very good. So that, in 10 years to do out of state single family investing, get into passive investing, and then also be in 5 projects as a GP. You've been very busy, and I was looking at your resume before this, and you just left your W-2 in the last year, I believe. Is that correct?
Yes, correct. Because it became overwhelming. I at some point I figured out that, okay, I have to choose one route. I can't actually focus on both. And of course, that should be beneficial for my investors as well. They will get more attention, or they know that I'm putting more focus on the business, right? So that's why I thought that, okay, now it is the time that I quit my W-2.
Are you interested in real estate investing but don't know where to get started or think you don't have the time or money? Are you stuck in your W-2 because the golden handcuffs make it hard to walk away? If this sounds like you, check out impactequity.net and schedule some time to talk with the founder, Randy Smith. Randy went from massive income to leaving his W-2 through passive income, and he can help you do the same. www.impactequity.net.
Congratulations. I know that's
Yeah.
You and I have somewhat similar paths. I was in corporate America
Yeah.
about 25 years, and I didn't choose to leave. I guess I did technically because I didn't go back, but getting laid off is a little bit different than making the decision to leave. And you were an accomplished engineer working for a very large Fortune 100, Fortune 200 organization. So talk to me a little bit about that. The day that you made the decision, I would imagine that took some time. And it wasn't just something you woke up one day and decided to leave your W-2. What did that look like?
Absolutely. I was actually, preparing myself to do it for the last almost 2-3 years, because,
Okay.
and frankly speaking, I was doing the same thing again and again, same engineering thing. So that kind of probably made me bored as well. I was hoping to get some new challenges.
I'm sure.
I had an MBA degree, so I like this financial stuff, analytical stuff. So that's another thing that kind of pushed me towards it. Another thing is, of course, the time freedom, right? I have 2 little kids, so I actually aspired for more time freedom than gaining more money, from my W2 job. Money is not the only thing that people actually hope to get all the time in their life. At some point, you will realize that time is the more precious thing that you actually would like to get than money. Because otherwise, many a times, I have seen it, like many of my colleagues, they earn a lot of money, former colleagues, a lot of money, but they don't have any time to enjoy that, So that is something different that I want in my life.
Yeah, I think it's an interesting thing as well, because a lot of people feel like when you leave the W-2, you've got to 100% replace your W-2 income. And, what I'm finding is that most real estate investors don't wait until they replace all of their income. And kind of the argument behind that is odds are when you're making very good income, you're probably saving significantly. So I think it's important to really dig in and understand what your expenses are, understand what you need to actually live on. And then that becomes kind of this entry-level financial freedom number where all of a sudden, once those core expenses are covered, then you have some flexibility and you have some choice and you have some freedom. And when you factor in the time piece to it as well, it's hard to put a dollar on getting time back to spend with your spouse and your kids and to do the things that you enjoy. I know you're a heavy traveler, so traveling to 57 countries in a W-2 role, that must have been challenging. So has a large portion of your traveling been in the last few years, or have you always been a heavy traveler?
Last 10 years, yes.
Okay.
Yeah.
All right. So you get into real estate, you start traveling, and yeah, you've been a very busy gentleman. So, well, let's talk, if we can, about you're an active investor, you're a passive investor. How do you blend kind of your portfolio of investments? Are you trying to be more active, or would you ideally like to be 100% passive at some point? I'm curious how you're managing that.
So yeah, right now I'm actually planning to be more on the active role side. But of course, like when I see that I have gone to a level of saturation, then I'll probably focus more onto the passive side. Another thing is, like, Randy, I know that you follow the same strategy. Like when I want to get myself involved with some big operator or some other, fundamental partner, I first want to invest passively in their project just to get an idea, because I don't want to land my investors to some domain or to some space where they might get themselves into trouble. So better to actually test the soil with my own money. That's what I do. So when I'm talking about the passive investment, probably that's what even in future I'll also do, to kind of find out, test, and get an idea about my future partners.
I love it. Yeah, you definitely, and it gives you an experience that you can then relay to your investors as well. That not only build confidence in your trust in the deal and in the operator, but just your overall experience and knowledge in the space to know the different type of deals and operators that are out there. I know when I first got involved in the space, like I only knew a couple of big operators. And, over the last 5 years or so now, I think I'm invested across 10 different operators. But, being in the space now, we see a very large volume of deals will come across our desks. So we get to know the good and the bad and the ugly of all of the different operators that are coming across.
Right.
So
Right.
but let's shift a little bit and kind of like you've invested with 5, or you're an active operator on 5, and you've invested in 6 operators as well. Let's talk about that selection process. Like, how did you choose your first groups to partner with from an active, and how did you choose those first groups even passively to invest with?
So frankly speaking, like when I chose the first group to go as a general partner or first group to invest as a passive partner, I didn't do a lot of research. I'll be honest. I didn't do. The first group I went as a general partner. At that time, one of my friends, he kind of introduced me to this lead general partner, and that's how I actually kind of started it. Now, on the hindsight, now I see that, okay, maybe that was not the right move. But people actually learn through their mistakes. That's what we know, right? So, most of the time, unless you were super lucky or unless you were super cautious, many of the times you make mistakes on the first move. So, and even same thing is applicable for my first LP investment as well. Because I didn't know. Frankly speaking, I didn't know. And let me tell you this thing. In my experience, in last 2 or 3 years of experience, one thing I realized that if you want to invest, even passively, if you want to invest in a project, there is no way you can understand or you can know the loopholes or the possible holes where you can actually get sunk. Only way you can know if you go to an academy. That there are many mastermind academies. Many people think that the academies are only to become a general partner. I would say wrong. Academies are not only to become a general partner. Even if you want to invest wisely as a limited partner, then also you need to go to these academies. And of course, another common way is seeing like the people who has done successful projects in the past. Mostly that's the way people actually invest. But I'm saying, like, if you really want to know that, okay, what are the basics of this project? What are the other things that I need to consider? There is no other alternative than going into the mastermind schools or in these kind of academies.
Yeah. No, I would agree. I think the due diligence process and the skills around due diligence are something that's going to evolve. Certainly, I think when you're first getting started, it makes sense to be around a community of people that are investing as well in the same types of projects. So, not that, herd mentality certainly can have some negatives to it, but if you're around folks that are putting their own money in deals, you're having discussions about this, you're not just having a conversation with an operator. It's important to bounce this stuff off of other people as well, because you just don't know when you first get started. So I know for myself, I made a lot of my early decisions just based on podcasts that I had listened to for a long time and books that I had read and talking with investors. But the true education starts after you get some real dollars into the market, and you can start seeing monthly distributions, and you can start seeing the monthly updates that you start to get. But inevitably, I think, this sitting on the sidelines and watching for years is far too expensive. I think there's good deals out there all the time. So
Yes.
yeah, that's
yes.
a really good point. Now,
Right.
I know with being a GP, and you mentioned an academy. So are you comfortable sharing which academy you were a part of, or were you a part of an academy? Or
Yeah. So of course. So I actually joined Vertical Street Ventures, and then I'm also part of another group called Fundamental. So these are the two academies that I've been so far.
very good. Yeah, very good. Both. I have invested heavily with Vertical Street, and I
Yeah.
am a member of Fully Funded, obviously, as you know. So
Yeah.
yeah, very very big fan of those. So
Yeah.
good.
Yeah.
Yeah, and I think that's an important piece too. As investors, I think it's important to know the people that you're investing with, that they're in communities as well, that they have access to those resources, they have access to other experts. And, a lot of times you'll see where people are, they might be new to the game, but they're partnered with other people that have a lot of experience. And it's important for them to have that experience, just to make sure that the deal, inevitably, when things get difficult, they need to have some experience on the bench that can help them there. So yeah, kudos to you for investing in yourself, and investing in your business to make sure you're surrounding yourself with the right people.
Right.
So I'm curious, kind of a sensitive subject that's going on right now. You hear a lot about capital calls. You hear a lot about pause distributions. I'm curious what your experience is. You've got a number of different LP positions, and you're involved in a number of projects. How would you rate the strength of your portfolios now? Are you comfortable with where they're at, or do you have any concerns today?
So with my portfolio, for few of them, there are some concerns, of course. Concern in the sense that, of course, as the rate almost doubled within just 13 months. So these projects are kind of having difficulty in refinancing and also to produce cash flow to the investors. But as like if you know the business, then you will understand every business has a up and down time. Not like it will always go up. It's never the case for any business,
Yep.
right? You
right.
You have to be patient.
Right.
You have to be patient. You have to hold it in a strong hand, with strong hands. If you just give up, then you give up, right? Then success will never come.
Yep.
So you have to actually withstand the headwind. You have to tackle it with your all other kind of innovative maneuvers, and you have to survive, so that the headwind will pass by, and then the better time will come again. Same thing happened in 2008, right? Many people got panicked and they sold, and later on they realize, oh man, we made a mistake. We should have actually, held it for a few more years or so. Right?
Right. We should have been buying more at the bottom, right?
Buying more, or shouldn't have sold.
Yeah. No, I agree.
Go ahead.
Yeah. Yeah. No, it's interesting. If you look at cap rates, what they're doing, the values of multifamily, where they are today compared to where they were 12 or 18 months ago, many people argue that we're down, 20% during that time period. And if that is the case, then now truly is the time to be buying, because it's at a discount compared to where it was. And I feel pretty confident once we see interest rates start to drop, even if ever so slightly we see them drop, I think that will be the shift in the market. I heard in a podcast today that Blackstone is getting ready to invest some of the biggest numbers that we've seen in a very, very long time. There's a couple of other very big players that are starting to put some capital into the market. So, if the big guys feel that now's the time to be placing capital, we might not be at the absolute bottom, but they feel confident, in the next 12 to 18 to 24 months, if you buy today, that it's going to be a very good time, and you're going to wish that you were buying today if you did not. So I'm curious your take on the market and the economy. There's a lot of information out there about interest rates and inflation. Curious, what are your opinions about where we're at in the cycle right now?
So what I think is like, it's not like interest rate need to go back to where it was. It's not even the interest rate.
Right.
Market is so hot. I mean, in terms of like, interest rate or other things, it's because market is not getting any indication from Fed. So once the Fed gives an indication that, okay, now we will start cutting the rate. That's the point. That's the tipping point, right? That's that's the point for which the whole market is waiting for. Then what we'll start seeing, Randy, as you probably know, that all this cap insurance, right, that will start going down, because like what I meant, right? Like a $1 million cap insurance for whatever we are buying right now, that was like only $50,000 or $30,000 just 2 years,
Right.
just 2 years back. So once market gets a right signal, then you will see that cap insurance actually start falling like a dominoes, wall or so. So then it will actually bring more buyers into the market. And as I said, the rate doesn't need to be like very low or so. Even if the rate goes down by 100 basis point, many people will come into the market. Because see, like if there is, let me give you an example. Like if there is, let's say a $20 million loan, right? You have $20 million loan on a property. So 100 basis point down, meaning is you are getting $20,000 more revenue each month, right? Because that's like less expense from your debt expense. So that $20,000 you are giving to your investors. So people will see that, okay, that 20,000 can actually, cover my other expenses and it will be added to my cash flow. Then why not? So that's why I'm saying, like into 2025, by 2025, even if we get 100 basis point cut, that will trigger a huge wave of new investors and new buyers into the market, and that will push the competition.
Love it. Yeah, no, that's such a great point. Just that simple. Once we see the shift, those rate caps will decrease in value significantly, and just simply that will encourage activity as well. And for those deals that might be struggling right now, just the decrease in the rate cap could help a lot of those deals pretty significantly. Mm-hmm. So very good, very good. Well, what's you've had a very busy year. You left your W-2. You've now officially launched the business. You're very active in a number of different deals. What do you see for the next couple of years for you and potentially even for your investors?
So in next couple of years, definitely I want to expand my footprint into some other markets, maybe some other asset class as well. I mean, right now I'm confined into the markets of Texas and Arizona, but I'm actually planning to expand that footprint to Florida and North Carolina as well, so that my investors get more options to choose from and more diversity as well. And now asset class, I'm still actually looking into. Maybe I'll actually, expand that coverage into different asset class as well. And of course, I want to increase the operation. Or right now, like on an average, I got myself into like 2 deals per year. But my plan is to get into at least 4 different projects per year going forward or so. That's what actually I'm planning for right now for the next couple of years.
Perfect. So. And you focus primarily on multifamily value add. Is there a particular type of operator that you like to work with, or what makes a good deal for you today?
So in the current market, as you know, the current market is quite challenging in the sense that because still we have a very high interest rate. So if you can run your property really well, there is no way you can make money. No way. So that's why I'm very cautious. So I'm actually partnering with the groups who have a proven track record, and mostly who have their own vertically integrated property management company, because these are the combinations, or these are the attributes that can ensure your higher occupancy, lower cost, which can give you better cash flow. And that's what the investors actually hope for.
Yep.
So these are the criteria that I have set myself for myself also.
I love it. Yeah, no, I think when the market gets more challenging, operations, property management, asset management all become ever more important. I think this ability to shift strategy as well is really important. It's the end of the month, so I'm reading all of my investor reports, and to hear that the operators I work with, they're watching the market so closely that literally from month to month, they're deciding whether they're renovating units or not renovating units. Does it make sense to renovate these units and spend the money to do that? Or does it make sense just to get another tenant in there without going offline for 3 weeks or a month to do the renovation? So
yes,
having a partnership with operators that are that fluid and have the agility and the ability to change and adjust, I think is really, really important. And bringing it in-house, I think, is really the only way you can do that, right?
Yes, exactly.
Very good. Well, good. So let's see here. We talked about interest rates and business plans, some of the tough questions and due diligence. What else is on your mind about this space right now?
So yeah, I mean, that's what I was kind of thinking also, like that people that this is
Sure.
the right time to buy for them, because as we know, like we had a historically high number of inventory that hit the market in last year and this year, right? That's also put some pressure, and I would say there is a good amount of pressure on the market, because those high number of those influx of new units, they were giving some discounts. So existing other complexes, they needed to give the discount. But I mean, another point some people are missing, that those new construction, they began during the COVID time, when the interest rate was super low, super low. And things got changed, right? After in last, especially 2 years, our lumber cost got increased, your labor cost got increased, your loan cost got skyrocketed. So there was almost no new construction request in last 2 years. So that will create a huge vacuum in 26, 27, especially. So when that vacuum,
I think that's such a good point, Sanjoy. Thank you for bringing that up.
Mm-hmm.
Well, very good. Well, I think, we've covered a lot here, and I'm excited to see what you and your team do in the coming years. Obviously you and I have been having some discussions recently about possibly working together on some things, which I'm really excited about. I'm very impressed with you and with your team and what you've been able to do. So thank you so much for being on the show. We do still have a few questions that I'd like to ask all of the folks on the podcast, if you have a few minutes here at the end to run through those.
Yeah, sure.
Very good. Well, let's jump in. So knowing that the average listener to this is a newer passive investor, can you share a good educational resource, whether it's a book or a podcast or both, that could help them get educated as they're starting their journey?
Yeah, sure. Actually, this is the question that I even get many times from my new investors as well. Hey, Sanjoy, how can I mean, you are, whatever you are telling is great, but how can I actually get the ABCD knowledge about this multifamily investment and how the whole business sector works? I mean, can you recommend a book? So this is the book actually normally I recommend. It's the best in class. Actually, in fact, one of the writers, Gary Lipsky, he's one of my partners in one of a deal in Tucson, Arizona. He's a great guy. I mean, and he knows the business really well. But this book is pretty amazing. I mean, it's a short read. People can actually gain a lot of knowledge from this, and of course the other podcast as well. I mean, they can hear the Bigger Pockets podcast, and of course the other useful podcasts they can listen and prepare
Sure.
themselves.
Yeah, great. I've not had anybody mention Gary's book before, but I know Gary personally. He and I are in a mastermind together, and of course we know a lot of the same people in that space. So I'm glad that you mentioned that. Gary's a great operator that has some really nice assets as well. Actually, he sold an asset to another very good friend of mine just recently as well. So that's exciting that you mentioned that. I'm curious for the new investor, that due diligence process is so important. So are there some due diligence questions that you think they should be asking, or ones that maybe get overlooked that the new investor should be asking?
Yeah, the new investors can, of course, they ask some tough questions to the operators or the syndicators. Let's say one question could be okay, how much the reserve should be, right? I mean, because I have seen many operators, they keep only 2 or 3 months worth of reserve, but ideally they should keep 6 months worth of reserve. So, and the second question could be okay, what is the break-even occupancy? I'm not talking about the physical, economical occupancy. What is the break-even economical occupancy? And I mean, the underwritten model was based on what? Have they done any stress test? How long the project can go with that break-even occupancy or below that break-even occupancy? And also, what are the crime rates in that area? I mean, how have the investor or the syndicators considered the crime rate? And what would be the demography, right? What is the median income of the demography residing in that area? Because let's say if they have $60,000, $40,000 median income, and you are asking for $1,600 rent, that's kind of unsustainable thing, right? So yeah, basically these are the things that they can ask when they invest.
Love it. I love it. So you almost went right down my list of questions. So I love that you're asking break even, occupancy. I love that you're asking about stress test, the crime piece. A lot of people don't look at crime. All really, really, really important questions. So yeah, great job. That I sound silly saying this, but it warms my heart to hear that you're asking those same questions, because those are the same questions that I'm asking. So listeners, pay attention. Those are the type of questions you should be asking for sure.
Yeah.
Okay. Well, we do have just a couple of fun questions to get to know you just a little bit more personally, but can you share a bucket list item that you've recently checked off your list? Being a traveler, I suspect that it's going to be a travel one, but any bucket list item you've checked off recently would be fun to hear.
Yeah, being a traveler, you are absolutely right. I mean, every year I have a bucket list and I check it off from my list. So let's say this year I checked off something from my list. I had a plan or dream to go to Cambodia. I checked it off. And so that's from my traveling. Yeah. But from my business, I had a kind of not a wish, but a plan to actually learn all the AI stuff to kind of give it more steam to the business or to help my expansion.
Okay.
That's what actually currently I am actually working on and trying to see how it can help also.
Okay.
Yeah.
Very good. Okay. All right. And then the final question is, if you had $100,000 to place today and you couldn't put it in one of your own deals, where would you put that $100,000?
So I will, right now, as you know, there are many distressed deals that are hitting the market. So I would probably actually search for one of those distressed deals. Distressed, by the word distressed, I mean the operator is distressed, not the property is distressed. Not like it's a shady property with very low occupancy. I mean, like maybe the operator had some other issue, money issue, or some loan issue. Their loan got expired. They didn't have any money to kind of refinance the loan. But those are the properties where I should have been, investing that 100K. Because I know that those properties
I love it.
will appreciate very soon if operated properly.
Perfect. Well, Sanjoy, thank you so much. I feel like I learned a lot. I'm sure our audience did. This has been a lot of fun. Thanks so much for being on the show.
Yeah, thank you. Thank you, Randy, again for inviting me as well.
All right. And to the audience, as always, we encourage you to continue your education journey in the passive investing space. But more importantly than that, we encourage you to make the decision to make that first passive investment. Both Sanjoy and I believe that once you do, you will just wish that you had started sooner. So thank you again for listening today. And join us again next Thursday for another great episode of The Gentle Art of Crushing It. Thank you.
Well, there you have it, ladies and gentlemen. Another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.